Hi, everyone. Good afternoon. And thank you so much for joining today's webinar, Show Me the Money, which is a masterclass on first-time home buyer programs. So happy to have you here. Just a little housekeeping to start. We do have the Q&A open. So if you have any questions, please do not hesitate to ask them in the Q&A. There are some little informational sections in the chat to start as well. So please just give that a quick view, but we'll go ahead and jump in. Just so you know, this session is recorded. So if for whatever reason you'd like to revisit it or you haven't had a chance to view it in its entirety, please definitely check out the recording and make note for your records. I'd love to introduce myself. I'm Sherelle Gaines. I am a community development lending officer with MidFirst Bank. And I focus on a first-time home buyers program that runs throughout Orange County, LA County, San Diego County, and Santa Barbara. I'm going to touch a little bit on some of the down payment assistance programs that are available to buyers, as well as kind of walk you through all of the nuances of down payment assistance. Also share some great resources with you that buyers can take advantage of, like home ownership education and counseling. If you have any questions during the webinar, please don't hesitate to ask in the Q&A. I will follow up with those towards the end of the session. So to get started, I'd love to just jump right in and kind of walk you through kind of just the initial conversations that I always have with first-time home buyers that are trying to decide, are they able to purchase? Is this something that's a smart decision, especially in today's market? I'm sure you know and have experienced this. There's so many changes. There's volatility, there's interest rates, there's a lot of challenges that may feel daunting for the first-time home buyer. And I always love to start with a buy or wait calculator. This is kind of a little bit of a spreadsheet that can help someone that's on the fence determine whether or not it's a good time for them to buy or wait. A lot of times we want people to buy, or we are all based on getting deals done, getting deals closed. So obviously we want to encourage them to buy. And a lot of times people are not aware that they're actually ready to buy because they're not aware of first-time home buyers programs that are available to them. They're not aware of down payment assistance programs or closing cost assistance programs that are available. So that's what today is all about, providing those resources to help you get more deals. This is a buyer weight calculator that I have utilized with clients that kind of shows people what a scenario could look like in terms of if they were buying now. And a lot of it really just kind of depends on, hey, do you have some reserves in order to get the process started? Are there reserves that can go towards down payment and closing costs? What does that look like? A lot of buyers think they have to have 20%. They kind of have this idea in their head, oh, if I don't have 20% down, I can't buy. Well, there are programs out there that offer 100% financing. There are programs that offer down payment assistance. So that may actually be a obstacle that we can circumvent by knowing these programs, but also kind of giving people snapshots of what monthly payments look like. Sometimes I have clients come to me and they say, well, I only want to pay $1,500 a month. And I had to be like, that's not realistic. So this is also really great snapshot of what monthly payments can look like depending on loan amount and inclusive of principal, interest, taxes, and insurance. I do have a spreadsheet and handout that Elsie and the Orange County Realtors are so kind to provide everyone. On that handout, there will be resources, websites on there for you to access. Please feel free to also contact me directly for a buyer weight calculator that you can use with your buyer. But it's a really wonderful way to just kind of start getting your buyer understanding what monthly payments could look like and whether or not they can realistically afford it. Now, there are many pros and cons when it comes to down payment assistance. Part of what we're going to do today is really go through specific programs that are available. But to start, down payment assistance is not a one size fits all. It's something that is specific to each program. And there are pros and cons of down payment assistance. Some of the pros are it allows you to increase the purchase price. There's less out-of-pocket expense. You could expedite the purchase timeline. You're not having to wait for the buyer to come up with full funds and a full down payment. Some of these programs even offer forgiveness for loan forgiveness, grant forgiveness. Now, some of the cons are there are stringent guidelines, and we will go over these guidelines as well. The escrow periods may also be extended, potentially depending on the program. Many programs do aim to close within 30 days, but it could be extended to upwards of 45 or even 60 days. So it's really important to know if a buyer is using a program, what those parameters are. And a lot of that will fall on the loan officer. And this is where having a really great relationship with the loan officer and open communication is important. And these programs are first come, first serve. That's something that you're going to also see in today's presentation. I have done this presentation twice before, once at the very beginning of the year, a second time in the spring. We are now doing this program again in the fall. But I share this because now that we're in the fall towards the end of the year, some of these programs have exhausted funds and they have closed applications for 2024. The best time to start with any type of down payment assistance program is always going to be at the start of the year. So if you are working with a buyer that needs assistance, you really want to start timing the pre-approval process, that down payment assistance process, as close as you can to the start of the year, and also monitor these programs to see when funds do become available. The other aspect of this, additional documentation is often needed for these down payment assistance programs. Not really something you worry about on the realtor side. It's more on the loan officer, but there will be extra preparation that will come into it. So the more you can educate your buyer that may need this assistance, the better. Now, this is a great resource for down payment assistance search engine. It walks you through different programs that are available. By utilizing this link, a buyer can literally put in their information, where they're based, and it will show that buyer all the potential down payment assistance programs that could be available to them and a direct link to access. This link is included in the handout. Please take advantage of it. It's a really great starting point, as there are programs that are national, regional, and local that can be available. So there are specific programs where if you're buying in a certain city, they may have a first-time homebuyers program. There are also state-specific national programs that are offered. So it's always about seeing what a buyer can take advantage of. And some of these programs can be layered on top of each other, where a buyer could use multiple programs for the sales transaction. Now, I'd love to start by sharing one of the programs that MidFirst offers. This one I personally love because I find it to be very flexible overall. And this one is really crafted more around the loan versus just being specifically down payment assistance. So to share this one, MidFirst Bank offers a dream home loan and grant, and this program is currently available for both first-time home buyers and eligible repeat home buyers. So this is something you won't see in many programs. With the MidFirst Dream Home Loan and Grant, like I mentioned, it's open to both first-time and repeat buyers. Many programs are exclusive to first-time home buyers. Sometimes the buyer may have to even be a first-time or first-generational home buyer. So I always like to share this because it is going to offer you incredible flexibility for your buyer, and then also repeat home buyers that may have purchased and are looking to either upgrade or downgrade and move into a new owner-occupied primary residence may be eligible for this program as well. With the program, it's twofold. First, there is a grant of $6,500 that may be utilized towards the down payment and/or closing costs. Now, the grant is specific to a loan tier. So for the grant, there are two tiers, where for loans up to $750,000, there's a grant of $6,500. And for loan amounts over $750,000 and up to $1 million, there's a grant of $5,000. So either loan tier, there is a grant available. And the great thing about the grant is there's no repayment required. It is fully forgiven. So this is just financial assistance to help make the lending process easy and financially accessible. The bank does offer a loan up to $1 million, and up to 100% financing is available as well. So buyers can take advantage of low or no down payment for loan amounts up to $750,000. If the buyer is looking for a loan slightly higher, they're looking for that higher tier price range, absolutely perfect as well. We do offer loans with up to 90% loan to value for loan amounts over $750,000 and up to $1 million. So this means the buyer's only having to put 10% down, but regardless of the loan amount, there is no mortgage insurance whatsoever. So they do not have that PMI. They are going to save several $100s monthly by not having that PMI that you would traditionally see on an FHA or a conventional loan if they're not putting 20% down. For this product, it is a conventional loan, and it's a fixed rate conventional loan with terms of 15, 20, and 30 years. And the only condition is the property must be owner occupied, primary residence located in the program territory. As mentioned, the program territory is in Orange County, LA County, Santa Barbara County, and San Diego County. For Orange County, it does encompass a lot of kind of East, South, and North Orange County. So everything from like Irvine, Tustin, Costa Mesa, Santa Ana, Anaheim, Fullerton, parts of Placentia and Brea, Orange, even going as far south as a little towards the Mission Viejo area. So very all-encompassing. And the product does cover warrantable condos, townhouses, single-family residences, and duplexes, as long as the duplex is owner-occupied primary residence for one of the units. There is also flexible underwriting offered, minimum credit score 640 and up to 50% DTI. And the great thing about this program that you will not see on many down payment assistance programs is there are no income restrictions. So borrowers that are both low to moderate income as well as high earners may be eligible for the Dream Home program. And the great thing about this, it closes in 30 days or less. So a very seamless escrow. Now to go into some other down payment assistance programs. This was a very, very popular program, the Cal HFA, where there was up to 20% down payment assistance being offered. This was that program that got wildly popular and then exploited all funds within 11 days. They did change the parameters of the program, so it is more streamlined now. It is a voucher-based program, and it's basically a shared appreciation loan up to 20% of the purchase price. So that's a down payment assistance program where the homeowner pays back the original loan plus 20% of appreciation in the value of the property. The term of repayment may not exceed 30 years, and it is due upon sale, transfer of title, or payoff of the loan. So this is definitely something that a buyer needs to be aware of in terms of the shared appreciation, because that would eat into some of their long-term appreciation and equity. But it's a really great way to have a large amount of down payment assistance. Now, this program is specific to first-time home buyers looking to purchase an owner-occupied property anywhere in the state of California. Now, at the current moment, funds have been exhausted for 2024. So like I mentioned, when it comes to these programs, if someone is purchasing towards the end of the year, many of these down payment assistance programs will have exhausted funds and will close the applications. Like with this program, applications are currently closed. It is typically expected for funds to reissue at the start of the year, but it's definitely something where it just has to be monitored, and it's best to apply as soon as possible once funds are available. So this is where that timing becomes really important. There is an income restriction on this program. The maximum household income for Orange County is $202,000. The income limit does vary by county, but this is specific to Orange Orange County. And with this, there are parameters under which a buyer may qualify. At least one of the buyers must be a first generational home buyer. So that basically means, no one in their family, none of their parents, whether biological or adoptive, may have owned a home. That is the requirement for at least one of the buyers. And then all buyers on the sales transaction must be first-time home buyers. So really important to have that conversation with a buyer ahead of time. If you're thinking of sharing a down payment assistance program, they are required to complete a home ownership education course. That'll be a through line for many of these programs, having to do that home ownership education. And then you must utilize one of their approved lenders, and the buyer must meet the credit, income, and loan requirements. There is a link included in the spreadsheet, as well as the handout for the Cal HFA program. So that way, if you have a buyer that could potentially be a great candidate, you can kind of monitor when they will open up applications again. And it is voucher based. So basically the buyer goes on, applies for a voucher. If it's received, because it's a lottery system, if they do receive a voucher, then that voucher secures their funds for a period of time. Now, the city of Orange County, the county of Orange has a mortgage assistance program. This is a program where there's down payment assistance up to $80,000, not to exceed 20% of the purchase price. So good amount of assistance there. It is a silent second with a principal and 3% simple interest that's deferred for the term of the loan. So it is paid back. With this, funds are first come, first served, and currently available. So with many of these programs, again, first come, first serve. Some of these more like regional programs tend to be lesser known. So sometimes they will have funds that last a little bit longer, which is a great thing. For this particular program, the buyer must be a first-time home buyer and purchasing within specific unincorporated areas in Orange County. I do have them listed on the screen just for a reference point, but basically the buyer would be needing to purchase in an unincorporated area or one of the cities listed. Now, for this program, it is very much geared towards low to moderate income borrowers. And I do understand with Orange County, it is a very expensive housing market. So sometimes the people that may qualify for this can only purchase in certain areas, or people that you may want to help and offer a program are over the income limits. So it's important to know which programs have higher income limits and which one have more stringent. This program happens to have more stringent. There is an income limit of $80,400 for a single individual. It does give a breakdown if you have 2, 3, 4 buyers involved. And so that's the total household combined income. Now, with this program, the buyer must contribute at least 1% of personal funds. So this is something where the buyer is going to have to put some of their money down. So this is a case where a borrower would need to have reserves. They need to be able to have something to contribute towards the down payment, as well as being able to cover both the closing costs and just reserves for a rainy day. With this program is a fixed rate for fixed rate conventional loans. No ARMs are allowed on this. And that's another through line you're going to see with many down payment assistance programs. They do not allow ARM loans. So with this basically adjustable rate mortgage, that is not allowed and must be a fixed rate loan product. And with this, they must do a HUD approved homebuyer education, and they have to be pre-approved and utilizing a participating lender for this program. So feel free to utilize that handout for a link to the County of Orange Mortgage Assistance Program. There is also a WISH program, very similar in nature to the prior program, really being geared towards, again, some low to moderate income borrowers. For this program, it's up to 30%, and it does a 4-to-1 matching. So what this means is for every dollar that the borrower contributes, the program will contribute 4. So it is something where the buyer does, again, have to have reserves in order to contribute. And really, the more they contribute, the better the matching. Now, the great thing about this program is after 5 years, the grant can be 100% forgiven. As long as that buyer remains in the property, doesn't move it, sell it, the grant will be forgiven. So really nice aspect there. It is available for first-time home buyers that are purchasing in Orange County, LA County, Riverside, and San Bernardino as well. So a lot of flexibility in terms of area for this program. First come, first serve grant funds. They are currently accepting applications as well. Again, this is a program that has an income restriction. So this is the breakdown for that income. For a single individual, the maximum income would be $88,400. So like I mentioned, knowing who to present and offer these programs to is really essential. Now, they do have programs that are more flexible in terms of debt to income. For example, like MidFirst, we go up to 50% debt to income. This program is a little more stringent. They only allow a maximum front end DTI of 35%. With compensating factors, it does go up to 38%. Compensating factors are basically anything that's a positive in terms of the loan. A borrower having a long employment history, great credit, no credit concerns, significant reserves. Those are all compensating factors that may allow the program or the lender to increase the DTI. The back end DTI may not increase past 45%. And again, the buyer must complete a HUD-approved homeownership education course. That's going to be consistent with all of these programs. And then for this program, the application must be submitted prior to escrow, and the buyer must be pre-approved through a lender, but may use any lender. So as to lenders, and if they have to use a particular lender or pre-approved lender, again, that is program specific. So especially if you are looking to layer different programs, then you would have to find out which programs allow you to utilize any lender, or if it's a specific lender, you may or may not be able to only use that singular program. But the goal is just to provide these options and resources to you, just so you know what is available in the market in the event a buyer does need that additional assistance. Now, there are city-specific down payment assistance programs. So for example, the city of Santa Ana offers My First Home program. Again, for first-time home buyers, but it offers up to $120,000 for a low-income borrower and up to $80,000 for a moderate income borrower. So depending on where the individual falls in terms of that landscape, they may have more or less funds available. This is a deferred loan with 0% interest. Repayment is required after 45 years of affordability, and the loan may be forgiven up to $40,000 for eligible applicants. Basically, for forgiveness, a lot of times it's just showing that the buyer has retained the property as an owner-occupied primary residence for a period of time. Funds are first come, first served, with applications currently open and funding being available. When it comes to funding, always go on the website just to check out if funds are currently available. Sometimes they could go as fast as a day, where they're there one day and then, they get a contract in and they're no longer available. So just know all of these funds are going to be time sensitive. The sooner you get the buyer in and get them in the programs, the better. Like I mentioned, this is income restricted. So I do have a breakdown of what low income is considered and what moderate income is considered, and the maximum for a single individual up to 4 individuals on the loan. And they're going to look at the total combined household income for that calculation. Now, the buyer is required to contribute 3% of personal funds. So this is a program where a buyer must have some reserves and contribute at least $3,000 towards the down payment, and then additional funds would be offered through the program. I specify that the funds must be seasoned for a minimum of 90 days. So it's nothing where buyer can just throw some money in a bank account and say, oh, these are my reserves. It's always best if a buyer has significant cash sitting around somewhere. Sometimes, you have individuals where they've putting cash under a mattress or in a coffee can. You want to always get those funds in immediately. So then that way they are seasoned and showing in the bank account for a minimum of 90 days for this program. For this, there is also a DTI restriction, not to exceed 40% front end, 45% back end. Buyer must complete a HUD-approved homeownership education course, and co-signers and variable rate loans. So again, those ARMs, adjustable rate mortgages, are prohibited. So this means a buyer would need to have a fixed rate loan. And preference is given towards veterans and individuals who work or live in Santa Ana. So this is why I mentioned there are programs at all different levels, programs that are offered specific to a city. So if you have a city, you're looking at a buyer, you're looking with a buyer in, just go on Google and see if that city or that county is offering a specific first-time home buyers program. More often than not, they are. And also with this application, they may be submitted once in escrow, but it is a 30 to 45 day close of escrow. So when I was mentioning sometimes these programs will have a longer timeline, that is something to be aware of in advance. So as you negotiate and place an offer, whether or not you need to adjust the time whatsoever, or if you can stick with the standard 30-day close of escrow. The buyer may use any lender and just has to have pre-approval, that financing through the lender. There is also a closing cost assistance program. So all the previous programs we really touched on covered a lot of down payment assistance, but there's also programs that are specific to closing cost. And this is something that is actually offered through the California Association of Realtors and the Neighborhood Partnership Housing Services. This is a grant of up to $10,000 to cover closing costs. It is fully forgiven. There's no repayment due. So it's just funds to help make the lending process easy and financially accessible. Funding is available for income eligible first-time home buyers that are from underserved communities purchasing a home anywhere in California. At this moment, applications are currently closed and funds are exhausted for 2024. It is expected that funds will recoup for 2025. So it's something that you would just want to follow that link at the bottom to see when funds are reissued. Oh, pardon, my light went off. Now this is an income restricted program. So with this, it does have specifications as to what income is allowed for an individual or multiple borrowers, slightly higher than some of the programs that we looked at before, but it may not exceed basically moderate income level for the county. Now, with this, the buyer must do a homeownership education. Again, that's a through line on all of these programs. I will share a Fannie Mae homeownership education course with you all momentarily. Really great if you are working with first-time home buyers. Go ahead and just have them get that coursework done. Get this out of the way, just so it's one less thing the buyer has to worry about when in escrow. This program is specific to single-family residents, and the buyer must live in the home for a minimum of 3 years, and they cannot have more than $20,000 in savings after the purchase. So this program is not just geared towards a certain income, but it's also for borrowers that do not necessarily have significant reserves, that do need some assistance when it comes to reserves. And the realtor that they're working with must be associated with the California Association of Realtors. So the great thing here is really actually helps push some business your way. So it could even be a selling point that you offer with the buyer that needs that assistance, and say, hey, by working with me, I can actually, connect you with the program to help cover up to $10,000 in closing costs. Now, with this, in terms of applying, the application may be submitted once in escrow. This would need to be done at least 3 weeks prior to the close of escrow. So with many of these programs, it's going to be preparation, knowing which programs are available and have funds that may be easily accessible, and then also doing some of that legwork with the lender ahead of time, because it's best if the lender knows, hey, okay, this is what we're going to do, the realtor is understanding this is what we're going to do, let's get all of that documentation prepped and ready to go in advance, so that way once the offer is accepted, there's no potential hiccups once in escrow. Everything's kind of ready to go, and the lender's already had a chance to verify that the borrower would be eligible for the particular program. And the buyer must have financing through a lender, may use any lender for this program. Now, one of the best ways to get a buyer that needs assistance prepared is to connect them with a home ownership counseling group. And these home ownership counseling groups really are going to walk evergreen buyers that may need a little bit more handholding. They're really going to walk them through the pre-qualification, the pre-approval, the loan process, so that they know what to expect every step of the way. And at the same time, how best to prepare that documentation. What documentation is a lender going to need? Epicenter is a program, a homeownership program that is based in Orange County, as is AHC, Affordable Housing Clearinghouse. These are both based in Orange County and do both virtual and in-person counseling. They do offer no or low cost home ownership and credit counseling, plus financial literacy. This is a great way to just get the buyer fully prepared, especially if they aren't quite ready. Maybe there's some like income or credit or reserves, hiccups that still need to be worked through. Take that work off your plate, take that work off the lender's plate, connect them with the home ownership counseling organization. Allow the organization to get your buyer ready so that they have everything prepared. Once they're in that state where they're able to move forward, now you know you have a buyer that can successfully close escrow. These programs offer English and Spanish speaking counselors. And again, they're really great for first-time home buyers because they're going to do that readiness assessment with the buyer and also walk them through that documentation preparation. There's also credit counseling services that are offered in the event sometimes that a buyer needs some specialized attention when it comes to credit. I also have some great resources for credit specialists. So always happy to connect directly as well. And then as for home ownership education, this is a really great home ownership education course. It's offered through Fannie Mae. The link is fanniemae.com/education. The course is available 24/7 in English and Spanish, and there's no cost for up to 2 applicants. So this is great when you have that buyer that's like they're actively looking, maybe you guys are ready to put an offer in. Go ahead and again, have them knock out that HUD approved home ownership education, whether you utilize the Fannie Mae course or utilize a separate course that's HUD approved. It's always best to do it in advance. Some of the courses may require in-person. This course is a virtual course, but regardless if the course is live or not, it's going to be beneficial to do it in advance. And they do sometimes have time requirements, so that way the buyer just has one less thing on their plate, because you already know when we're in escrow, it's already stressful. To do as much legwork as we can in advance is always the most beneficial. Now, I'll get into questions momentarily, but I would like to offer my services to you and your clients. It would be a pleasure to be of service. Please save my direct line. That is my cell phone, 619-241-6442. I would love to answer any specific questions you may have, or if you have any questions about whether it's MidFirst's Dream Home Loan and Grant Program or any of these others, more than happy to connect with you and walk you through those. My email is also listed, sherelle.gaines@midfirst.com. Would love to offer my email up to you if it's easier to communicate in that manner. So I am going to open up the Q&A. So I want to just go and go through these questions. If you have any questions, please go ahead and drop them in the Q&A at this moment. But I'll go ahead and read the ones that are showing as unanswered. First one is from Sharon Lewis. Thank you, Sharon. Thank you for doing this. So many condos are having these issues because of the increase in insurance rates. Some are underinsured and because of that have lost their FHA qualification. Do you have a workaround or suggestions on that? Sharon, this is a great question. It's something I am running into all the time. And to just kind of walk all of you through the challenges with condos now, you may already be aware, but lending for condominiums has gotten very strict and stringent. It really ties back to Surfside, Florida. If you all recall, the condominium in Surfside that collapsed on itself and killed many individuals living in the property and basically had to be demolished. Because of this, there was deferred maintenance on that condominium, maintenance that obviously structurally needed to be completed immediately. Because that condominium had that experience, basically Fannie Mae HUD got more stringent on lending on condos and making sure that these condo projects are actually doing the maintenance required to maintain the structure, the property, the roofing, all of those aspects. So the challenge with condominiums is many lenders, especially banks, do not want to lend and will not lend on condos unless they are Fannie Mae or HUD approved. And what this means is they basically meet the guidelines for either Fannie Mae lending, that's conventional loans, or HUD approved, which is FHA. So, for example, at MidFirst, I run into this a lot, especially if I'm working with kind of individuals that are in that low to moderate income, where the entry level to get in is going to be a condo. I am doing a lot of legwork up front to see if the condo is approved. Our underwriting team has a system where we're actually able to go into HUD, go into Fannie Mae, and verify if the condo has that approval. That is something that I recommend doing in advance. Rather than just placing an offer and wishing for the best, it really is going to be best to speak with the lender ahead of time and see if they're able to verify if that condo project has either of those approvals. At MidFirst, if it does not, it is considered a non-warrantable condo, and the likelihood of it being approved to be lent on is 0 to no, or to low. So with this, we have done spot approvals. We will occasionally offer spot approvals if a condo project is not approved, but is in good standing. And what this means is there's no litigation on the condo project. If there's any litigation on the condo project, a lender most likely will just not lend on it. You'd have to get a non-warrantable condo loan. There has to be significant reserves. So when I talk about reserves, basically the reserve should be about 10% of the annual budget. So if the reserves are falling significantly lower than that, then it may show that there are inadequate reserves so that if there were structural needs, the HOA is not able to cover them, or they're not able to cover it without a significant special assessment. So the budget is going to be reviewed. So the lender would need a copy of the HOA annual budget and the reserves assessment. If owner occupancy is low, that would be a cause for concern. A bank is going to want to see at least 50% or higher of owner occupancy. So basically, majority of the individuals living at that condo project are owners. It's not highly rented. That is an aspect of concern. And in order to do spot approval, we basically need a condo questionnaire and the HOA documents, proof of insurance, for example. We would need a copy of the master insurance policy. That is required. So as an agent, when you're thinking of placing an offer on a condo, you also maybe want to have these conversations with the listing agent ahead of time and asking them, is there any litigation? Is there master insurance coverage? What's the owner occupancy percentage, what is the reserves, and have those conversations up front, and then also speak with the lender to verify if it's Fannie Mae or HUD approved, and if they will offer any spot approval. If you are doing spot approval, then you pretty much need to make sure all of the condo documents are in upfront as soon as possible, because there is always the chance the lender may or may not approve that. So those are my recommendations for the condo projects. And then I see Robert Razzo, I know rates vary, but what kind of ballpark rate range on this dream home loan? Great question. So right now, just so you all know, on the Dream Home program, this is specific to MidFirst Bank. It is our signature portfolio product. And with this, the bank is able to dictate the rate. So we are falling about a half a point under competitive rates at this current moment. For 100% financing, we are at 5.75%. The rate is not guaranteed until locked, but a very, very competitive rate for 100% financing right now. And again, we'd be at 5.75%. Now, with this program, we do actually incentivize borrowers to put more down, because we base the rate on how much the borrower places for the down payment and not on the credit score. So if we're working with someone that has some reserves, I can actually craft the loan to be most advantageous for that borrower. Whether we're going 100% financing or if they're able to put some down, we could be looking as low as 5.55% if the borrower were able to put just over 10% down. So a lot of flexibility in terms of being able to craft the loan to the specific buyer. But again, a very, very competitive rate, falling well under the sixes for the current program. Okay, Roxana Torres, thank you for your question. You said, who is considered a first-time buyer? This is good to ask, because when it comes to first-time home buyers, at MidFirst, we do follow Fannie Mae guidelines, which means in order to be considered a first-time home buyer, that individual may not have any ownership interest in real estate whatsoever for the past 3 years. So if that person has previously owned a home, but it's outside of the past 3 years, they would be considered a first-time home buyer. So let's say you had someone sell their home in 2020. We're now in September 2024, they would be considered a first-time home buyer. But let's say they sold their home in December of 2021. They would still at this moment be considered a repeat home buyer. You would have to wait until after the recording date, whenever that data was sold, and 3 years out from that in order for the individual to be considered a first-time home buyer. Okay, Justin Snyder, question is, for this program, is there a minimum income requirement? So in terms of minimum income, essentially, yes, the buyer has to be able to qualify for the mortgage payment. So in terms of minimum income, it's not like a specific amount. It's just whatever the amount the buyer is trying to do for the loan amount, they have to be able to meet the mortgage payment, and that debt to income could not be over 50%. So this kind of comes down to, essentially like loan amounts, like, oh, if you're looking at a certain amount, what's the minimum payment? I always like to just tell anyone, just overall, the best way to maximize on a loan amount and to be able to get the best possible loan amount is the buyer really needs to decrease as many outside liabilities as possible. We want to decrease as much revolving debt, so credit card debt, store cards, decrease as many installment loans, whether that be student loans, auto loans, personal loans, even if there's things like child support, alimony, IRS commitments. Those are all liabilities that are taken into account when looking at the overall debt to income. The more minimal those are, the better, because then we can just focus on maximizing on the monthly mortgage payment. And with something like that, I do tell people, especially with student loans, because I run into this a lot. A lot of times people have student loans that are in deferment, in forbearance, and they think they don't have that monthly payment. As a lender, I still have to calculate that monthly payment at 1% of the total balance. So when I like to have these conversations about income, I'm not just having a conversation about income, I'm also having a conversation about credit and credit liabilities as well, because a borrower could make significant income. I've had borrowers where they make $200,000, but then they have such high debt that their liabilities eat up a lot of the loan amount. And then on top of that mortgage payment, that's how we're coming up with the total debt to income. So again, it really just comes down to what is the loan amount and then what is the monthly payment, and ideally having minimal liabilities on top of that so we can fall under 50% debt to income. If anyone has any questions in terms of like loan amounts and what potential monthly payments are, please email me or call me directly. I'll go through those one-on-one with you to kind of walk you through specific scenarios. So thank you for that question, Justin. And I have a question from Ni Yang Feng. Can a first-time home buyer of 70 years old man with good credit score get a 30-year mortgage loan? Age doesn't really factor in. Absolutely, that absolutely can happen. When it comes to age, what I'm assuming is you're more so possibly asking about if a retired individual could get a loan. When it comes to income, yes, retirement income can be used to qualify for a loan. It's all going to have to do with what the income totals. So if a person has, pension, Social Security, maybe has even I don't know, funds coming in from like stocks or something like that, we can look at the overall picture. As long as they have the income to qualify for the monthly mortgage, then absolutely that age has no factor whatsoever. Whether you're 30 years old, 50 years old, 70 years old, it's really about looking at the income and the credit liabilities, and that's how we're able to determine the debt to income. Age has nothing to do with that. It's more so, are you W-2? Are you a business owner? Are you self-employed? What are your sources of income? So thank you for the question. And last question I see is from Jessica Fernandez. How long does the condo approval take? So for condo approval, it's somewhat dependent on how quickly the HOA furnishes the documents. So usually at the start of the process, the lender is going to ask upfront for the HOA documents as soon as possible. Some of these documents may have to be ordered by the buyer. So when it comes to like an all hands on deck, as a lender, I'm going to be also talking to the agent and being like, hey, like, please help stay on top of this buyer because we need to get these condo docs in as soon as possible. And with HOAs, some HOAs take longer or shorter to furnish those documents. Once they're in, the underwriter will review, like I mentioned, the master insurance policy, the budget, the condo questionnaire. There may or not be additional documentation the underwriter would wish to review. That process is usually just a matter of a couple days or so. Just, they're reviewing that documentation to make sure that everything clears. At MidFirst, when we do a condo project, we're closing in 30 days. It's not necessarily longer unless there's any hiccups with the HOA and we run into an issue that then we require more documentation on. This is why I say, as the agent, it's really good to have these conversations upfront with the listing agent. Now, it's who's to say that listing agent will disclose this, but hopefully someone will be forthright so that you know whether or not it's going to potentially run into any obstacles. So, for example, if a listing agent says, well, it is, there is active litigation, that probably would not be a good condo project to place an offer on because more than likely you are going to run into hiccups and potentially not close. So have those conversations up front, talk to a lender up front. So for example, if I'm working with you, Jessica, and you're like, Sherelle, we're interested in this condo project. Here's the address. Here's the name of the HOA. I can actually go and have the underwriter verify it ahead of time, be able to give you an answer within 24 hours or less as to if the condo project is Fannie Mae or HUD approved. And if it is, I'll say, hey, this is a great condo project to potentially place an offer on. It is Fannie Mae or HUD approved, and this is the expiration date. So it can be a very streamlined process, a very quick process, close in 30 days or less, as long as we do a little bit of that legwork upfront and have that open communication. So thank you for your question, Jessica. Anyone else before we hop off? I'll give just a couple seconds if anyone would like to throw any last minute questions into the Q&A. Elsie has also been great about answering questions in the chat. I know there was a question about if you could receive the slides later. Like she mentioned, this is recorded, so you will be able to go back to the recording. There is also a handout as well. On that handout, we'll have the list of websites and resources that were in today's presentation. And please also take down my contact, my cell phone, 619-241-6442, my email, sherelle.gaines@midfirst.com. You are also welcome to contact me directly. Happy to have conversations offline and answer any questions that you may have. I don't see any other questions coming in, so I'm going to go ahead and wrap today's presentation. I would love to thank everyone that attended. Thank you so much for giving your time today. And for those that ask questions, I appreciate you asking questions and helping me offer a little extra specification to everyone. Again, I would love to be a resource to you and your clients' needs. Do not hesitate to call or email me. And if you have any first-time home buyers or repeat home buyers that are looking to purchase in Orange County or any surrounding markets, I would love to offer the dream home loan and grant to them. Get them some 100% financing or $6,500 towards closing costs and down payment. And again, no mortgage insurance on that loan product. So we're really able to maximize on the loan amount and offer a really great process. Always love to start with pre-approval. That's always the best route for us to go. So I look forward to connecting with you all. Thank you again for your time. And Elsie and the Orange County Realtors, thank you so much for having us today. I hope you found today's presentation very beneficial. And let's close deals. Thank you.